I'm going to start now. Hi, everyone. Thank you so much for joining us today. My name is Anna, and we are Epic Events, the organizer of today's Cannabis Hemp CBD pitch event. Epic is an e-commerce website for, and let me actually share my screen. Epic is an e-commerce website for frontier technology products and events. Frontier tech includes AR, AI, blockchain, and other bleeding edge industries. Our mission at Epic Events is to ignite ideas and expose technologies that will underpin future society. And Cannabis is our latest addition to our events. Before we dive into our event today, I want to cover our next upcoming events. Otherwise, I'll never get to it. Our next event, so currently we have, oh, actually, is it on there? It's not on here. Okay, so currently we have the pitch, the Cannabis Hemp CBD pitch. Tomorrow we have the State of Blockchain VC panel, and we've got happy hours, industry happy hours for the rest of the week. So today's event, like I mentioned, is Pitch Your Cannabis Hemp Startup to VCs and Angels. It's a chance for startups to pitch their companies in front of an audience and panel of expert VCs and angel judges with a special interest or tie to cannabis and hemp. Before we introduce our judges, I want to cover the format of the pitch. Each startup will have 4 minutes to present, 4 minutes for the judges as a group to ask questions, and then lastly, 4 minutes for the judges to give feedback. All right. So on with the show, I'd like to give our judges a chance to introduce themselves. Judges, can you please introduce yourself, your company, your investment thesis, and any other prior relevant investments? Michael, do you want to start?
Sure, I'll start it off. My name is Michael Bonello. Thanks for having me today. I'm with Preside Asset Management, and we are a venture capital firm based out of San Francisco. We've been focused on investing, 100% focused on the cannabis industry, and only the cannabis industry since 2013. Originally got started, as many people did, on the ancillary side. And we're currently running a portfolio that's about half ancillary, half plant touching, and looking for companies around their Series A round, so a little bit later stage. And we had invested in seed round up until launching our second fund for the most part. But it's a couple of notable investments around the spectrum. In terms of hardware, we've invested in PAX Labs on the software side, Headset, and then in terms of vertically integrated operators, we're investors in Spark in Northern California.
Okay, awesome. Next, can we please have Larry? And can you put your video on? Awesome.
Hi, my name is Larry Schnurmacher. I founded Phyto Partners in 2015.
Yep, hearing an echo.
Phyto Partners in 2015, cannabis-focused venture capital private equity fund. Since then, I've invested in about 30 businesses that operate in and around the cannabis industry. We don't invest in licensed producers. We primarily invest in businesses that provide business-critical solutions to the licensed operators. So the ancillary businesses that don't touch the plant. We've invested in a number of industry leaders over the past 5 years, including LeafLink, FlowHub, Greenflower Media, Mattio Communications, Front Range Biosciences, a number of others.
Okay, and are you guys, can you guys be more specific about what you look for in your investments? Apart from it being an ancillary service and not touching the plant.
So very specifically, I look for businesses that that provide, like I said, a business critical solution to the licensed operators. So mostly B2B companies. Technology companies work really well. They fit the bill in that they provide some sort of a compliance solution, a staffing solution, a human resource tech platform to manage your employees.
Okay, anything about the team, metrics, things like that. And Michael, after Larry, you can also please elaborate on those things.
Needless to say, we're looking for a strong management team, some, people who have launched startups previously or been involved in whatever they're bringing to the cannabis space, something they've probably done in another industry. So ad tech, for example.
Okay.
Somebody who's been successful advertising, marketing, digital marketing for other industries. They can bring their skills to the cannabis space and help the businesses work around the issues, the compliance issues for advertising and marketing, and to finding those customers, because it's a lot trickier in the cannabis space than, let's say, fitness or sending people Meals on Wheels or something.
Okay, so a team that has a lead or an advantage, an unequal advantage in marketing, perhaps. Michael, did you want to add to that for Poseidon?
Yeah, in terms of the types of teams we're looking for, to Larry's point, we love a team that has experience in cannabis. There's a lot of situations where the founder may have that experience and then surrounds themselves with people from traditional industries to help take the business to the next level. So we like teams that are open and flexible, and that one of the things in this industry is there's a lot of lack of collaboration, and we like teams that look at other companies and look for collaborators and aren't trying to do everything themselves. I think that's important.
Okay, all right, thank you. Nick, can we have you next?
Yeah, good afternoon, everybody. Nick Easley here, Managing Director for Multiverse Capital. Multiverse Capital has 3 separate venture funds. One's for licensed medicinal operators here in the United States, another for licensed adult use producers, and our third fund is an ancillary fund for anything from packaging, data, real estate that help to serve those investments in portfolio companies. Typically looking for, when it comes out of our venture funds, for companies looking for anywhere from $500,000 to about $5 million. Oftentimes our fund might take a position alongside an SPV, a special purpose vehicle, with maybe one of those limited partners if it's a larger investment. I've been in the space myself since 2006 from Colorado as a caregiver, moving forward through consulting companies and now doing license applications for over 170 licensed companies here in the United States. One of our sweet spots is getting early stage investments for the licensed operators. Specifically this last year, a big focus has been put on social equity applicants, helping to back capital for individuals inadvertently affected by the drug war. But I love early stage companies, especially, be it we're stage agnostic, so we've gone in anything from a seed to a Series C investments. And typically we'll try to balance between short-term returns or some of those long-term, like potential IPOs for companies. But with the current status of the market and none of the federal stimulus pretty much trickling down into our industry, currently have been looking for certain SPV targets for distressed assets in single state operators, as well as many that could be well positioned for some M&As and consolidations here in the upcoming quarters. But really honored and thankful to be here with you all today.
Awesome, thanks, Nick. Sherry, can you go next?
Sure, hi. Thank you, Anna, for inviting me. We're getting to be regulars now, and that's great. I am the founder and CEO of Canna Angels. Canna Angels is an angel investment consortium dedicated specifically to the cannabis industry. We're on our 4th year now. We've got, let's see, very close to 50 companies in the portfolio. We have a very strong affinity toward those in the technology aspect of the industry, companies that have a strong technology base to them, and that might be demonstrated through agri-tech or biotech or data tech, lab tech, compliance tech, things like that, that can be scaled, that have IP on them, scaled not just nationally, but hopefully globally as well. And we've got, let's see, we're in our 4th year now of operation. We already have 5 exits. 4 of them were through acquisition, which is what we really prefer, especially in this environment. We do have global reach, and that we see companies from all over the world. We have in the portfolio now 2 from Israel, 1 from Canada. So, you know, we're looking at companies from all over if it makes sense for us, especially if that might be a synergy in our ecosystem within the portfolio. As far as the team, I think we're all, you know, all of us that are allocators and that are looking for companies, the number one thing we always look for is the team. With a great idea, it doesn't go anywhere without a great team. And so we're looking for teams that are cohesive. Maybe they've worked together in the past. This isn't their first rodeo. That's really great. Or if it is, they have somebody on the team that has some experience. It's pretty, you know, pretty much what we would look for in any industry.
Awesome. Thanks, Sherry. Luke?
Hey guys, very nice to meet you. Thanks for having me. I'm mainly an entrepreneur and a founder, but I'm looking at startups again, and this is kind of a full circle. I started my career at Echelon Ventures and Saturn Capital, which are 2 early stage venture funds investing in early revenue, like, you know, sub $2 million revenue companies, and even pretty raw startups, mainly seed and Series A companies. And I got into the cannabis and hemp tech businesses on the hardware side in 2017. My first venture was with Delta Separations, where I was the chief operating officer. And you guys may have seen Delta had a $50 million exit on, I think, February 12th. It was right before COVID-19 hit in a kind of a larger way. And Delta is an interesting case. I won't go into great detail, but the revenue ramp was $200K in year 1, 14 million in year 2, and then 46 million in year 3. It was a really astonishing hardware ramp. A company that's mainly focused on an extractor, riding the ethanol extraction wave, and it was essentially a 1x multiple. It wasn't a venture deal, but the founder did quite well, and it was an all cash deal that Gibraltar bought. Which their stock symbol is ROCK. And it was great that it was an all cash deal because the stock then tumbled right after, and it was an interesting transaction. So I recently, until recently, was CEO, and I'm a co-founder of a company that called Curian, that is focused on hardware, software, and services for extraction labs. Right now, in terms of, you know, like I said, I'm just starting to look at startups. The things that get me excited are IP intensive businesses. This can be utility. This can be process. This can be like deep chemistry. There's a lot of AI machine learning stuff that I'm seeing that's applied to this sector, which can be interesting. I tend to be more persuaded by larger, ambitious projects that are, you know, maybe not classic, you know, 3 to 5 year IRR kind of focus, but basically longer term, 7 to 10 year kind of. Is this a generational thing that's really motivating to a group of people? That I tend to focus on interdisciplinary teams. Where you know, a lot of disparate points of view are coming together. Sometimes that's harmonious. Sometimes it creates interesting tensions and frictions. So I also tend to prefer teams that are invested in a kind of a, you know, a conscious leadership and mindfulness and these kinds of things that translate into healthy company cultures. And so really looking forward to seeing presentations. I'll put my email on chat, and folks can contact me after too. Thank you.
Thanks, Luke. All right. So first up, we've got Alex Radner with Magic Moments Distribution. So Alex, if you want to put your video back on.
Yes. Can you guys hear me?
Yes.
Great. I'll share my screen now. All right. May I, whenever you're ready, Anna?
Yeah, you can start.
All right. Well, first and foremost, I'd like to thank the organizers and the judges for allowing me this opportunity. I'm Alex Radner, and I'm the founder and CEO of Magic Moments. I have a background in business development, and I'd like to tell you about our turnkey cannabis beverage venture. Magic Moments enables non-cannabis beverage firms to enter the cannabis space. In special partnerships with existing non-cannabis beverage makers, Magic Moments develops, manufactures, and distributes these partners' co-pack private label cannabis-infused brand lines. We have assembled a simple yet powerful ensemble of technologies, partnerships, manufacturing processes, and licenses to create cannabis-infused beverage venture that we believe can be profitable after 7 quarters. To launch this venture, we are seeking $2.5 million in funding. We are happy to share the details of this partnership agreements privately after the presentation with interested parties. Our value proposition is the beverage space is big, and it is obviously a fast growing market. In California, it is estimated to be $135 million right now. We think the premium sector is underserved, and beverages represent a safer alternative to smoking. We have at the ready agreements with beverage partners, existing brands, licenses, and infused beverages that we've already created. We also believe, another big value is our business model enables us, to go to market very fast and be profitable rather quickly. So the partners we are working with are currently non-cannabis, have our existing brands in the non-cannabis space. We have a premium pressed juice company that is nationally recognizable and distributes to 2 large coffee chains, of course nationally, and a large supermarket chain. We are going to be handling their cannabis line. We are also partnered with a premium Bay Area coffee company that is a coffee arm of a pretty well-known bakery in the city. And then our third is we are doing the house beverage brands for our dispensary partner that has given us shelf space, and they are backed by a nationally recognized premium cannabis chain. We are acquiring the necessary licenses to operate, and our partnerships with our beverage brands create high barriers to entry. It's very hard for others to come in and partner with these brands. We are looking to raise $2.5 million in $300,000 increments. The majority of the funding will be used to acquire the licenses from our ready to go space, and the equipment. We have a ready to go space in San Francisco. All the licenses and inspections are in order. We have already agreed on a price and just need to raise the money to complete the acquisition and put our machinery in and start bottling. This just shows that we'll be profitable rather quickly, in Q7 because of we're using existing brands, infusing the drinks and selling it through our pre-negotiated sales channels and network. Thank you, and I look forward to answering any questions that you may have. Please feel free to contact me or our colleague, Matthew Rudolph, who is based in Oakland. His email is banderpunch@gmail.com. Thank you.
All right. Thanks, Alex. Judges, Q&A?
I can start off if you don't know. Okay. Alex, you mentioned during your pitch that you were, quote, handling the line. but I'm not really sure what the business model is. I'm not really sure what handling the line means. I don't know what the business model is. And then I have another question about the ask. You said that you were asking $2.5 million in $300,000 increments. Does that mean that a minimum investment is $300,000? And yeah, I'll leave it at that so that everybody else can have a chance.
Okay, yes. So to answer your question, our company, we are essentially a co-packer that has exclusive relationships with a bunch of non-cannabis premium lifestyle brands with an existing presence that want to get into cannabis, and we are their channel to infuse the drinks and send them through our distribution network. And to answer your second question regarding the investment increments, we were looking for $300,000 as a minimum investment from each investor or group.
Hey there, Alex. Nick Easley here. Thanks for presenting. You used the word licensing a couple times, and with what I'm used to, I've got licensed operators like a manufacturing license, type 6, type 7 in California, but then also the intellectual property like brand licensing, Delaware, let's say C Corp, that might be having those licensing agreements for those brands to come through. So it sounds like you have like a hands-on license for manufacturing, or that's what you're working to get towards. And then you would have various licensing deals with these outside cannabis brands. My big question is like to clarify that. And then also there's the shelf space wars independent of COVID times for paying for shelf space when there's maybe an empty dispensary. But what are you also doing thinking about distribution?
Of course. So to start with your question,
how are you gonna like either get that or do that?
Of course. So to start with your question, and I'm glad you brought up these points. To start with your question about the licensing. So yes, our space is licensed in San Francisco. It's got type 6, type 11, and type 4. Part of the acquisition is, with the space is we acquire all those licenses so we could then infuse the drinks and then, distribute it through our sales channels. To your next question, how we plan to distribute since, the outbreak of COVID and it was always in, on the top of our list of distribution channels is through the delivery networks as well as dispensaries. But now it's a much bigger focus, obviously, on the delivery channels throughout the state.
And just to clarify, you're raising $2.5 million at what valuation currently?
We are looking to raise a seed round right now. So we are flexible. We are looking to investors for the valuation, but we're targeting somewhere in the shy of $10 million.
So you're trying to give 25% of your company away for $2.5 million, essentially?
Yes.
All right, thanks much.
You're welcome.
Larry, Michael?
Yeah, I was just like, can you talk to the differentiating factors of the product or the process to infuse products and kind of what makes you separates you from others doing that similar type of contract manufacturing?
Yes. So I think what separates us is really our relationships with the brands. We are their part of the terms that we work is we are their exclusive partner. We're their exclusive manufacturer and distribution for their brands. Cannabis line essentially. So we handle everything from the sales, and then we pay them a royalty on top of that. So that's what differentiates us. Also, our our turnkey platform allows for other brands to come on. Let's say a mid-sized company from New York wants to, get into California cannabis. They come to us, and we handle, it's a complete turnkey solution for them, and just pay them a piece for using their name.
Larry, did you have a question?
Do you have any sales currently?
No, currently we are pre-revenue. I've spent a lot of time and money along with my partners establishing the relationships with these brands, and then finding the manufacturing location to bring this all together so we can raise money to begin bottling. But we have created the products.
All right, judges, I want to move to feedback.
Go ahead.
Go ahead.
Okay. Alex, you heard us all say prior to your beginning about how important the team was, but I didn't hear anything really about the expertise of the team, and why would the team then be chosen for these contracts. And the other thing is that I think for a startup or pre-revenue with pre-licensing even, to be asking for $2.5 million is a bit of a stretch. So you might want to take a look at modifying that.
Thank you for your feedback.
Go ahead.
Hey, Alex. Thanks for the presentation. I think one of the areas that would be interesting to highlight, a substantial part of the raise was going to equipment purchase of capital equipment, and usually equity investors don't like to use their money for purchasing capital equipment. I mean, usually, right? And so it'd be interesting or I think helpful to just share the kind of terms and conditions, interest rates, personal guarantees, other things that come along with that, and the reason why you're using equity capital for that. So
okay.
Yeah.
So in the for the equity equipment is only about just above $250,000. There's about $180,000 in that for annual rent on the space. The products are, or the machinery is financeable. However, we haven't received quotes on that yet because, the markets are in flux. So once we have a stronger commitment from investors, then we will, go ahead and start quoting once we get closer to PO.
And Alex, you got Nick here. I guess a little bit of feedback. I always think, hands-on and hands-off. There's multiple businesses associated with this. I would think a property management company that would sublease from the original owners and then triple net lease that with an improved facility to the operational company, your licensed entity, and then some sort of probably IP licensing company, or how you're structuring those potentially rev share deals with those other brands, which then the big thing with a company like yours, I think IRC 280E, and how am I going to minimize the exposure to that based on very creative structuring. The other part I love to hear whenever I ask them what the value of your use of capital, let's say that 2.5 million. But whenever it's always a dance with the investors of what's the true value, and the agreement or the negotiation is what determines that. But if you ever at this stage lean too heavily on the investors to do that, they will take advantage of you every time, where I'd say, well, I think you're only based on your projections worth, 5 million right now. So I want half of the company, take it or leave it sort of thing. But easily, if you look at the CapEx and the OpEx, what do you need for the business to do this? And then kind of structure that as some is debt, some is equity. I think that debt commitment always gets us as an equity investor much more interested, because then I don't have to use our precious capital, which I want equity for, or to use things that you could be getting for 8, 10, 12% interest from debt financing for the property, for the rents, as well as for the equipment. But I think you definitely highlighted well, the beverage sector is growing, almost 140 million in California. And then with these sorts of deals, I'm sure you would think of, this is what's now. I always want to hear what's next. How are you going to grow this capital? Multiple states, brand licensing with other sorts of operators, and then your own sorts of distribution license in California to minimize that potential 10, 15% just loss of getting that to the retail, or getting that to the non-retail storefront delivery type licenses.
Exactly. So we initially, when we first roll this out, we will be doing the kind of the sales internally through our brands, and then we quickly move to work with distributors to help push that to the rest of the state and other dispensaries, and then we'll continue to grow by see a lot of growth organically through our brands, but since they are growing, but also we really look to be adding a lot more brands, guys that want to come in from out of state, even established companies, established beverage manufacturers. We want to be that solution, the cannabis solution for their beverage company, essentially.
Okay, so we're out of time, but I want to give Michael, especially when you had something to say earlier, and Larry a chance to talk, please, and give your feedback. Michael
Sure.
first, I think. Yeah.
I'll be really quick. Good presentation. I think in terms of covering the beverage segment, it's a fast growing segment. It's also a very small segment right now, and there's a lot of room for growth, which is wonderful. And I think from a contract manufacturing standpoint, it's a great idea. You see a lot of contract manufacturers out there in the edible space. You don't see them as much in the beverage space. So it's fascinating. Without rehashing what some of the other panelists said, one thing from an investment standpoint that I would be focused on is the exclusive partnerships that you have, how those are going to look in the timeline of, getting set up, selling the first product, and what happens if, depending on the timeline, if one of these other companies says, we want to take something to the market in the next month, how that looks. The other question I had is regarding San Francisco real estate. Very expensive city. Everything about the city is expensive, labor, you name it, regulatory costs, taxes. Question how you ended up with facilities in San Francisco over, say, Santa Rosa, even Oakland, which is a little bit better than San Francisco, but go ahead.
Right, of course. So originally we were working with a partner that we were going to sublease the space from, and they subsequently faltered with the licenses in hand. So we are buying out their licenses, and the rent didn't seem too burdensome. It's about $15,000 a month, inclusive of nets, for 5,000 square feet. So that allows us to scale. Also, we thought it was, we knew we're paying a small premium to Santa Rosa at that rate, but we're close to our sales channels, and our brands are located very close. So everything, kind of comes into San Francisco. So it's just very convenient, and it's efficient. And we're close to the 101. So go down to LA, it's in Palo Alto. So it just seemed like to pay the premium made a lot of sense.
Great. Thank you.
You're welcome.
I don't have a lot to add. I would go to the valuation for sure. Your pre-revenue, don't even, it's a little too early for me. And a 10 million valuation on no revenue stream is, that's kind of a non-starter. If it was a Shark Tank, I'd be out. So, unless there was something there, but.
Well, thank you for your time.
All right, guys, let's move on to our next startup. It is Chris Clampkin of Butter.
Hi, Anna. Can you hear me and see me?
Yes, I can.
Hello, everyone. Thank you for having me. My name is Chris Clampkin. I am the co-founder and chief executive for Butter. And I'm going to start sharing my screen and jump right into it. So our council would like us to read this to you, but I'm going to ask you to take a screenshot and move on because we only have 4 minutes. So Butter is a Michigan-based pre-revenue organization with facilities, licenses, and capital. And Butter will be a vertically integrated cannabis organization dedicated to bringing superior quality product to market, delivered in a personalized and consistent manner, and as a beloved brand. We are going after big human needs with this substance, aligned to a core problem we see in the industry, which is consumers are very undereducated in their pursuit towards cannabis. Our why as an organization, everything we do lathers up to this simple statement that we are seeking a better understanding of this substance. How we're going to do it is educating with transparency, and what we're going to deliver is a simplified product. What you're seeing on screen is a prototype for our packaging. This is built through the hands and vision of a guy who created the vitamin water bottle, childhood best friend and head of brand for Butter. He led branding and packaging for Coca-Cola for over a decade, and we're his first launch in the cannabis industry. Company introduction, we're going to focus on the Michigan opportunity. For those who don't know what's here, it's massive. I'm going to take you through our operations, starting with cultivation first, and then our vertical penetration into the market. You can see here rendering of our first retail facility in the city of Berkeley, Michigan. And I'm going to focus heavily on the team based on everybody's feedback and where we're at in funding to support this vertical launch. So the opportunity in Michigan is massive. I don't know if anybody's seen, but Michigan State University published a study last month that states it's a $7.8 billion overall economic impact, $3 billion directly from this substance, creating over 13,000 jobs within the industry and a massive impact on this state. It's a bit larger of a state than Colorado. We have about 76 more residents, and we're a very limited license state. It's up to the municipality like this one, the city of Detroit, which is not a recreational city yet. There's very few. There's 1,400 opt-outs so far. So very limited licenses, more importantly, very limited recreational, which we have in hand in Flint. So our first recreational and adult use and medical facilities in the city of Flint. We have 42,000 square feet currently under construction and supported by a strategic sale leaseback transaction. There's only 26 licensed operators today. The big number to throw out there is that this is a 1.25 million pound of biomass market that is very undersatiated, overrun by the black market, and very few licensed operators with tested product. The facility we have in Flint, a multi-tier LED setup, will produce over 7,000 pounds of craft flower each year, all in the hands of our head of cultivation and co-founder, which every plant you see in this presentation is from his rooms. He's scaled from planning through to optimized cultivation over 500,000 square feet, ending with Trike Companies, which was sold to Cresco Labs for $282 million. That's Tanae Cam. He's our co-founder and head of cultivation. So our plan, our vertical approach to market, we're starting with flower first in our indoor cultivation. You can see a couple more of our prototypes here on screen, followed by partnerships. So we have been sourcing brand partnerships from all over the country and world for the past few years. We landed on our first, which is a Colorado-based leading edible brand focused on mixing Ayurvedics with THC and low doses of CBD. Our retail will come online following in the city of Berkeley, which is a great opportunity. Very underserved market here in Oakland County, 6th most densely populated area of wealth that we are targeting to start, followed by an extended product line all out of our factory in Flint, all aligned to 280E best practices and increasing our margins through vertical penetration. This is the shell of our facility, which we've put $500,000 into so far, fully licensed with 10 Class C cultivation licenses and manufacturing. This facility is supported by a strategic sale leaseback. The raise we're currently asking money for, $3.5 million, is to support the closing of that large sale leaseback. All monies we've taken on, which are close to $2.2 million, 1.2 of which is in this round, is all held in escrow until the release of that strategic real estate transaction, which assures our path to revenue, starting with cultivation and manufacturing. We acquired a facility in the city of Berkeley, 2222 West 11 Mile. This is a badass location serving a very underserved market, very undersatiated tested product, and we're capable of producing at least $2 million of revenue through this facility per month, which sounds like a lot, but if you analyze the numbers as much as we did, it's actually very understated. And we thank Berkeley for that. They're only allowing for 3 licenses, of which we have the leading application, scoring 315 of 315 points, and we'll have that in hand within 3 months. The team, the most important part here, Tanae Cam, I mentioned earlier, heads up cultivation. Guy is a badass cultivator, one of the best in the world. I know everybody says that, but he's actually done it. So over 500,000 square feet, proven, all still standing and all still operating. Alex Center invented the vitamin water packaging and then led branding and packaging for Coca-Cola for over a decade. I went to kindergarten with him. He's launching this brand with us as his first cannabis brand. So proven. 2 producers are stars. And then you have me. I exited my first software platform to Topgolf about 2 years ago, which I took from seedling round all the way through to proving out a model, acquiring 4 million users, 100,000 daily actives, and then successfully exiting to Topgolf, one of the fastest growing golf companies in the world. Danny Amori, co-founder and chief compliance officer, exited his insurance practice last year. One of the top compliance guys in the state, achieving all of our licenses to date, and is capable of achieving any license. Jamie Ferroli head of strategic alliances and founding member. His family's company is called Feroli ESM, putting hundreds of brands on thousands of shelves from Maine to Florida. Very good understanding of consumer packaged good. One of his most notable achievements for the current firm, they created the Haribo package design, meaning what you see in every gas station up and down the East Coast, probably across the world, for Haribo. That's the result of their organization. That's the team, where we're at in funding. So I left the software world back April 1st of 19. We closed out our friends and family round May 22nd of 19. That supported acquisition of facilities, licenses, and currently we're raising $3.5 million, giving up 25% based on a $10 million pre-money, 13.5 post. And we have a lead investor set in this round who is the original investor in Columbia Care, who's happy to speak to each and every one of you that's interested in investing and is serious to close you on this. We have a $300K gap to where we need to hit, which is 1.5 million, releasing the strategic sale leaseback, assuring our path to revenue as long as build out goes to plan. I think I hit my 4-minute mark, or about 4:30. So that's me and our company. We're a great team, organization, and we have all the needed ingredients other than the final pieces of capital. That's why we're here, and it's nice to be with you all. Thank you.
Thanks, Chris. Judges, questions?
So can you go, the ask is $3.5 million. How are you valuing this business? Oh, it's a note?
We're at 13.5 million. We have an actual valuation set to our note round. So there's an actual share price based on our initial round. So we are raising at a 13.5.
How much revenue?
0, we're pre-revenue.
When do you expect to start producing revenue?
At the end of this year.
Hey, Chris, can you speak to what's going on in the world right now, and if that's changed any of your plans in terms of retail, perhaps focusing a little bit more on e-commerce and delivery, or perhaps that was already in the works for these locations?
So for those who don't know, the Michigan market delivery is approved. Governor Whitmer, a great woman supporting our state here, she has deemed essential service here for our organization and all that are operating. So construction's going on. Nothing has changed in the state other than the fact that it's curbside pickup and delivery only. Whitmer's done a great job of deregulating in this time of need. So you can go in with an expired license, an expired med card, and pick up or have it shipped to your house. It's pretty great. We're not changing. We're doubling down on our plan. This is, as I stated, a 1.25 million undersatiated need for biomass, of which there's only 26 producers to date. So we are focused heavily on getting live in our cultivation first and taking advantage of very high margins on flower, which I'm not even going to state what they were going for, but they're very high, and you can see that all in metric. It's all published on the state's LARA website. Was that Michael talking?
Thank you.
Hey there, Chris. Nick.
Hey, Nick.
Thanks so much for the presentation, Chris. Definitely the sort of thing I like to see, and congrats on the successes so far. We do and work with licensing in each state that's a bona fide market, minus the Texas, the West Virginias, and a few. So I've seen the opportunity in Michigan. I've also seen the shit show that it came from kind of like the hard medical system and the caregiver mentality. So really thinking about the good adult use production markets. Question that I have though is like with this, and way to start with 42,000 square foot indoor double rack LED system, a little bit more expensive, but your quality will be nice. With opening that dispensary, are you planning on carrying other brands or having your brands and just wholesaling to other retail locations to be able to do that, or just trying to do this all as your own license?
So something I don't know if you picked up on. Thank you for the question, Nick. Good question. So we brokered one partnership out of state so far. It's a leading edible brand out of Colorado, but we'll house about 60% of our own products. We ran the numbers. Our Berkeley dispensary will put out about 100 pounds per month. We're talking about producing over 7,000 out of our setup in Flint. So we absolutely will be selling wholesale across the state. It's actually mandated on operators here in Michigan to sell to others. So we will be vertical, but we will also have a very rich wholesale model, which will support the business and the brand across the state. There's no way we could just house butter on the butter provisioning shelves, and we don't want to. We want to align to every consumer in the state. Our brand is more focused on the the upper demographics in terms of income. We are going after more of a West Coast Vegas-like bud based on Tanay's cultivation experience and what numbers he could hit, as well as the actual product value. So I hope I'm answering your question. It's percentages on our store shelf will be about 60%, 40% others. We'll bring in other brands from out of state, and we're heavily focused on the wholesale market here in Michigan, which has a lot of opportunity over the next few years.
Perfect. Just the other clarifier, like since you're doing the sale leaseback, and I really appreciate you going through that. That's what makes this exciting, and interesting for us. For like let's say that 25% that you're giving away, that would be of multiple different entities, essentially.
No shell game here. You're investing in the whole company. That's our cultivation, our manufacturing, our retail, and everything we build from here. So yes, this is to fund the entire company, and our members, investors, will have a piece of everything.
That was time.
Roger that.
You guys,
thank you.
rest of you guys who haven't spoken. I think that's Luke and Larry.
Yes, I thanks so much for the presentation, Chris. Do you have any other detail that you can add about your manufacturing operation? I assume you're going to make concentrates, crude and distillate and isolate, or anything you want to share about that, and kind of that percentage of the overall economics.
Sure. So we have relationships across the state to procure distillate to start. We're not going to produce distillate, just to be clear. We're not going to develop a lab for a few years. It just doesn't make sense from a CapEx perspective. We're heavily focused on that high margin flower business to start. The brands we're launching out of our manufacturing facility, which is, there's 3 licenses that a vertical operator can have here in Michigan. So there's retail, there's manufacturing, which is everything you do from the plant, and then there's just cultivation. We have 2 of the 3 so far. Retail is coming online in the next 3 months. But to answer your question, we will be procuring distillate from the market to put into the packaged good. We will be focused on our flower lines to start.
Okay, so I just wanted to ask also, as far as contracts for your bulk product, for the wholesale product, the strategies to market, the strategies to acquisition of those contracts, and how many do you have online at this time?
I have contracts with 11 dispensaries across the state. Every single one of them will buy from me today if I have product. Just to be clear, Sherry, there's a very, very under-satiated market here. So you have about 132 dispensaries. You have about 4 actual producers. Only 3 of them have more than 1 license. So you have a very limited license state and very low production because of the amount of time for build out. So it's just a very nascent market with very little tested product.
I'll come to work with you.
We're hiring, so please, Sherry, especially if you got money to support us.
Yeah, right.
Well, I've put a lot of my own in, so I'll take anybody's.
So operations are not up and running. You're raising the money to start this from scratch.
We've already spent over $1 million over the last 2 years.
To get the licenses.
And facilities. So the way it works in Michigan is very chicken and egg. You have to acquire the facility, get the license, build it out, get phase 2 approval, and then you can transact. So we have done very much with very little, and why the lead investor is the original investor in Columbia Care, and why we have such strategic investors behind us is because of that fact. We've done so much with so little. A bunch of my own money, a bunch of our founders' money, and then about $1 million of our friends and family money. We have 11 licenses to date. That's 10 cultivation, 1 manufacturing, and we're about to get our retail. We've done with $1 million, $1.5 million, what most companies do with about 10, specifically in this state. So you'll see a lot of companies throwing a lot of money at a lot of facilities with the hopes of a license. We planned 3 years ago because we're Michigan natives. I'm actually from Brooklyn, New York, but my brother-in-law, Danny and Maury, is from Grosse Pointe. So we planned for Flint because we knew that it would be recreational eventually. So we started looking for buildings in 2017. We put our flag down for retail in Berkeley because we thought it had the highest likelihood of becoming adult use. So we put flags down about as strategic as you can get in this state with about as little money as you need to deploy to get those licenses. Now we have the facilities, we have the capital to actually build them in the form of a strategic sale leaseback. We now need the money to pay the rent because that's about $118,000 a month.
So like, I don't invest in licensed producers, but a number of my companies that we do invest in, I'd love to introduce you to when you raise your $3.5 million.
Well, we got 1.2 of that 3.5 after $1 million, Larry, and I'm a tech guy. You probably would have invested in Golf Match. I sold to Top Golf, and look, I get what you invest in. I can almost promise you that those companies you've invested in, or most of the software companies in the space, will not be there in a couple of years. I would encourage you to look at plant touching companies because brands are to be determined. I know there's not a lot of brand equity out there, but the Nike doesn't exist. We're going to be the Kind Bar of cannabis, and the long-term vision is giving a nutrition facts for cannabis. So I'm calling it an effect spectrum. You want to talk about tech? I'll talk about tech all day with you. I'm much more comfortable in that realm, and I'm happy to evaluate companies that you have. I'm more happy to meet people, and thank you for saying that, Larry. I'll take introductions to anyone. We are set to launch. We just need a little bit more money. So thank you for saying that, Larry, and I will take you up on that.
Yeah, and guys, I'm moving into feedback. So if you want to roll it in, Larry or other people, let's do that.
So number one, I want to thank you very much for enlightening me, particularly on the state in Michigan. I didn't realize the potential there. So I appreciate that very much. You did a great job. And also, I appreciate very much your highlight of the team. You're very strong on the team, and that came through loud and clear. So great job.
Thanks, Sherry.
Mm-hmm.
Well, Chris, this is Nick here. Yeah, great presentation. It's cream of the crop when it comes to Michigan from a lot of the things that we've seen or even companies we've worked with to try to structure some of these investments because we do see the opportunity. But, you know, based on the team, their previous experience, knowing that Michigan is one of those unique entities. You got to spend the money, pay to play to get the license on that facility. And most people didn't realize that. So they just amble and walk around looking for that. So I think it sounds like a great company. Your team's got the track record for it. You've chosen very strategic, high retail, kind of dollars per square foot, population density, disposable income for retail, look like good parking. The indoor 42,000
70
square foot.
spots, Nick.
Oh, I value dispensaries based on parking spaces in normal pre-COVID world, but
we have 3 shared parking agreements supporting that facility and
well,
our own 15 spots.
You already had me, but now I like it more because you've asked the right questions, you've done the right legwork, and you've put in the time, you've put in your own money. It's everything that I like to see, and this is the sort of business I can value. Even though you're pre-rev, you're close to it, and you're not going to have some wingbat wannabe master growers jump into this. You have an experienced professional team, so I'd love to hear some more information and follow up on this. If you need another couple million, we definitely would love to look at that.
How do I get you, Nick?
Nick at multiversecap.com. Get that to our investment committee.
Thank you so much, Nick.
You too, Chris.
I would say it was a great presentation. It's just not in a space that I focus on. But arguably you could get excited about the Michigan market's going to be great. I mean, that I agree with 100%. And I guess the brand in Michigan could be, you know, the Starbucks of Seattle.
Thank you, Larry. And I know pretty much every tech company in this space, so I'm happy to introduce you to really great investment opportunities on the software side.
Thank you.
I echo everything that Nick and Larry have said. I think, you know, you guys are doing so many right things going into this. The brand, the packaging, I think it's beautiful. Your JVs with other brands out of state, that's the way to go. You know, collaborating, the team you've built. And the other thing you said, which I think is very important, especially when you're talking about a vertical integrated operation, is that you have focus. You know, we're going to start with cultivation. There's the biggest need there. And we're going to roll into these other things. And your comment about, you know, what's a couple of years down the road because there's no use to doing it now. I think that speaks volumes. And I think it was a great presentation. I think you know where we stand in terms of it's tough for us because we're not doing pre-revenue companies, and this one hurts because you guys have a great thing going.
I'll still be calling Emily and the team.
Call anyways. Yeah, you never know.
Thanks so much, Michael.
I think that leaves Luke. And
yeah, I would offer the same effusive, unabashed praise as the others. Yeah, I thought it was a super strong presentation. You know, you know the comfort and the fluency is there. I mean, I know you come from tech, but it feels like cannabis is quite native to you. So I'd be, I'd be interested in learning more, but I'm not. If I were allocating time for investors, I would. On a 0 to 10, as 10 is a buy. 0 is you're just wasting time on a Zoom call with somebody that's not going to write a check. I'm probably a 3. So
Thanks, Luke. Appreciate the honesty and appreciate the continued praise. All. Yeah, for those who are worried about me not having plant touching experience, I have been using since I'm 13, and it's a big part of my life. It's my transition from 18-hour workdays into my family. I have 3 young children at home, so it's my transition. It's how I shut off after a long day. So I'm happy to go up against any cannabis operator in terms of expertise and knowing how to make this all successful. So thank you all for the feedback, and thank you for having me. And I'll shut up and get off the video. Thank you so much, everyone.
All right. And actually, Sherry, I did want to make sure that, did you want to add anything?
No, sounds great. I've got some Chicago investors that might be interested though, so we'll get in touch later.
Thank you, Sherry.
Yeah. All right, guys. Thanks, Chris. All right. So next we've got Jessica Sharp from New Era. I hope did I say that correctly? Actually.
Yes, that's correct. Can you see me?
Yeah.
Okay, fantastic. Let me just share my screen here. Okay, are you able to see my screen?
Yes.
Okay, fantastic. Hi, I'm Jessica Sharp, and I'm a co-founder of New Era. I'm super excited to be presenting to you here today. I started New Era with my co-founder, Cynthia Booty-Harjo. A little bit of context, I met her about 3 years ago. I was an executive at Google. I actually was head of crisis management there. I'm glad I jumped off then, right before COVID. And we met, and she was a former executive at Google, and she had just opened a community space in the Mission here in San Francisco, and we just immediately bonded over our shared love for community, immersive experiences, and cannabis. So that's when the idea of New Era was born. Today, when you want to drink alcohol with your friends, you go to a bar, and when you want to drink coffee with your friends, you go to a coffee shop. But where do you go when you want to consume cannabis with your friends? That's been our working hypothesis for the last 2.5 years. We've been pairing a premium retail experience focused on deliveries with interactive experiences. We've run about 20 pop-ups as well as some private ones here in the Bay Area, ranging from 40 to 150 guests. We have lots of social media followers. We were selected one of the 10 companies for the Ease Accelerator program, where 2 female co-founders were also a social equity focused company. And most importantly, we have 60 to 90% women who attend our events, and we have 30 to 50% folks who are new to the legal cannabis market. And I want to pause because that's actually really important. We know that retailers, if they want to continue to grow at the same rate as the industry, are going to have to be able to hone in on these audiences, and we have a proven track record of being able to do so. We're now moving into phase 2, which is a permanent location. We've secured a 8,000 square foot space in Japantown in the heart of San Francisco. For those who aren't familiar, Japantown borders the Pacific Heights and Hayes Valley neighborhoods, which are quite well-known and affluent neighborhoods. It also has ample parking, a huge parking lot, and lots of foot traffic right in the middle of the city. Because of the permitting laws and because we have secured this location, we will be the only dispensary and consumption lounge in all of Japantown. What are we going to do with that 8,000 square foot space? We're going to put in a few different areas. We're going to feature a tea house and consumption lounge, edibles, drinkables, non-combustible inhalants. We're going to focus on a retail that's going to be really focused on personalizing which products are going to be right for which folks. We're going to be carrying high-end famous California brands that we've been partnering with, Cococo, Kiva, Chemistry. We'll also be offering our own in-house white labeled flower line. And we're going to feature an event space and art gallery. This is a little bit strange to talk about in a time of social distancing, but at some point we will be able to get together again. And when we do, we will have an event space that any of the 3,000 cannabis brands in California could rent out for either a stakeholder meeting or direct to consumer, and they could buy and consume on site without impacting our day-to-day retail and consumption. So this is actually a really big win for us. We are in a time of in a time of COVID, so we have managed to pivot our strategy for continuing to build our brand and our community. We've moved our pairing of products and premium content online. On 4/20, we did a full day of online streaming. We had about 150 people show up for that. So that was really incredible to be able to push out so quickly. A little bit more about our team. I myself come from a risk management background. My former clients include United Airlines, Office Max, BlackRock Financial, University of Utah, most recently Salesforce. My co-founder, Cynthia Budi-Harjo, most recently started a very profitable, very successful community space in the Mission District. Before that, she actually built out the revenue streams for Google and YouTube with the live streaming platforms, which has given us a leg up in this COVID time. And before that, she was in finance in New York City. We also have Rodrigo, who brings as well a finance and cannabis background, and we are partnering with Morris Kelly, our equity applicant, who has over 12 years of cannabis industry experience. We also bring a set of advisors, top industry advisors across all the areas that we need. So we have policy Nicole Howell for policy, Dustin McDonald, formerly of Weed Maps, who basically mapped out comprehensively what it would take in order to be able to grow and scale cannabis, licensed cannabis. Doug Burnham, who's famous here in the Bay Area for building community forward spaces, and Tim Chang, our lead investor. He made the Midas list by Forbes magazine 3 times, and he's well known for picking future forward wellness focused companies. A little bit of back of the napkin math around our projections. The average San Francisco dispensary sees about 1,000 customers a day, and those on Market Street sees 1,200 to 2,500 customers a day. So we started with a conservative estimate of 800 daily customers, open 6 days a week. Average spend is $100. That comes from Headset. So that puts us at about a $25 million annual revenue. Now, the key thing is that we will be the only dispensary that is nested inside of an entertainment lounge. So in San Francisco, you typically see a dispensary with a smoking room. We are providing an entertainment lounge with a small retail inside. So because of that, we're anticipating to see more folks than just the 800. But additionally, the event space itself is also net revenue positive. So using Cynthia's experience with the entertainment space, we are able to add on about a $5 million annual revenue on top of the dispensary revenue. So what are our asks? We've raised a $700,000 friends and family round, and now we're raising a $4 million seed round. What that's going to go into is the build out, most importantly, and then working capital. We've structured the investment a little bit different than your standard cannabis company. We structured it similar to what you do in hospitality. So they're treated as like preferred shares. 80% of the profits will be used to repay the principal investment. We're anticipating it'll take about 2 years. And then upon repayment, investors will see 23% ownership in the company. This is a way to de-risk the model for a lot of folks. We have a lot of people who come from the tech and VC world who are putting in their personal money. And so we decided to structure this way in order to de-risk it somewhat. I have a little bit more about what we've done in terms of transitioning from COVID, but I do want to, I think I hit about the 4-minute mark and be able to take some questions.
All right, thank you, Jessica. Judges?
So I'll go ahead and begin. Lots of questions, and then I have lots of feedback. Let me ask you, I mean, this is a unique model, and I'm wondering if you have any kind of thoughts or ideas about future franchise or additional locations. That's the first question. Second question is, the model for the structure, the financial structure model for restaurants, I'm somewhat familiar with that, and that's a different model because it generally will yield cash flow, but it also generally doesn't allow for exit. And so I'm wondering, you know, how do we balance that?
Yeah, great question. For your first question around the unique model, this is actually really about foresight into how all of retail is going. Right now, cannabis is really interesting in that it's the only industry which people are still motivated to go to a store simply for a transaction. You do not see that in any other industry. So we are really moving to, why are people coming to your space? People are coming to our space to be in community, to have an experience, and they buy cannabis as a byproduct of the experience, right? So that's really what was informing the development of the model. We are planning on moving into additional locations. I didn't include that slide in here, but we do have a plan for growth and scale. And we are talking to people in other cities in which consumption is either already present or coming online soon, as well as other folks globally, including in Mexico and Israel. And in terms of financial structure, as I mentioned, this is our flagship location. We are planning on adding a lot more. We're planning on using our profits to continue to grow and build. And we are really looking for investors who see this as an opportunity to develop something that's really going to change the face of cannabis. Because as I said, people are no longer, as it grows, people will not be motivated to go to a location to buy something anymore. That is just a thing of the past. So we are really looking to grow a long-term focused company here.
Thank you.
Jessica, this is Nick here. Thanks for sharing. Social use consumption lounges have always been, high on our observation list because they're so limited. The other thing that you mentioned, all the 4 big cities in California had major licensing, have present tense major licensing problems. So backing with your social equity applicant, making sure to maintain that status, that unique position in San Francisco, and how like West Hollywood licenses were so sexy, so beautiful, like so limited. But then seeing the failures that a few of those social use lounges had, how do you plan it, with your team to do that differently in San Francisco, to where there's a gold mine of an opportunity for 5 of those licenses in West Hollywood, and I think only 2 are really moving forward. How are you looking at those models to be successful in San Francisco?
Yes, that's a great question. Thank you for asking that. San Francisco is a little bit different than LA. We've actually had on-site consumption since the legalization of cannabis. I say that with air marks because, if you look at the history, the San Francisco City Council legalized cannabis because of the AIDS epidemic. And because it was a medicine that helped people in community, and it was encouraged from the very first dispensary and from Brownie Mary to treat this as a medicine and to consume it together as a medicine. So San Francisco has the most consumption lounges of any other place in the world. And it, although it is not as famous for it as LA, because they are working to really make an ecosystem, here in San Francisco, you have dispensaries with smoking rooms. What in LA they're trying to do is build more of a ecosystem, and the way that they did is they want to make sure that one person couldn't win it all, so they sort of slice and dice who could do what, without realizing that a lot of the rules that they were making went directly at odds with state legislation, and that the city was not actually really fully supporting them in order to provide a viable business model. So it looks all really sexy and fun, but when you look at the numbers and how you operate something, that there's a lot of gaps and chasms in that make it very difficult for somebody. In San Francisco, we are partnered with an equity applicant, Morris Kelly, and we are going through the permit process right now. We're about to be pushed into phase 2. We have a tier 1 status for our application. Because of COVID, it's slowed down a little bit, but the office is still working, which is really great. And we are working with all the city departments. The Entertainment Commission here in San Francisco is working with us for us to become the first licensed by the Entertainment Commission cannabis entertainment space. So we are working very closely with the city. The city San Francisco loves cannabis. We're the first ones to make it essential within hours. We have the history. We really come at this from a community focus, and we've built this business no different. And that's why we believe we're going to be very successful.
Super. Thanks so much.
Thank you for the question.
Sorry, guys, time is up. So I'd like to say it's time for feedback. And for anyone who hasn't asked a question, let's kind of interweave it into your feedback.
So I'll go first, because this is actually a very interesting business, in that it does solve a big problem for the licensed producers, regardless that you need a license to do what you're going to do. And this whole cannabis lounge vertical is something that we think could be very big.
Thanks, Larry.
I was going to Similar sentiment in terms of the vertical. It's a growing vertical. That's very underserved in San Francisco. This is a very interesting business model, something very new I've never seen before, and implementing the event space into retail, into a tea shop. A couple questions I would have around it, not to be answered right now, but ultimately, you know, I understand the cannabis side of the business. I don't know anything about events, and wondering how, you know, you have consistently booked event space, and how the lack of alcohol might affect that event space, and whether we're talking just business, you know, business conferences and things like that within the cannabis industry. And then secondly, in terms of the revenue projections, again, can't speak to the event side of things. I think it's 24 million approximately in retail revenue. That's a high. That's a big store in San Francisco, a $25 million store. I'm not saying it can't be done by any means, but that's something I would probably lean into as an investor in backing into that. And I did follow your math with the headset data. I also appreciate you using headset. Shameless plug there, but good presentation. Thank you.
Thank you. Yeah, I'll just start a little bit. The event space, Cynthia, that is really her wheelhouse. And there are no event spaces that allow for on-site consumption, on-site buying and on-site consumption of product, really in the state outside of cannabis, the Cannabis Cafe in LA. So we're not, and we are competing with bars, but we're also not, in the sense that we'll be so early. I anticipate we're going to be attracting a lot of folks into our space. We really are doubling down on the movement around folks moving away from alcohol culture. We find that alcohol culture, people tend to be very abusive, and people don't, you know, really want to participate in that anymore. Here in San Francisco, we have a lot of emerging entertainment spaces that really don't focus on alcohol. The issue with those is then how do you bring in enough revenue? And we know that cannabis can do that. But in terms of the revenue projections, yeah, I think if everybody were able to see into the books of the cannabis retailers and how many customers and what their actual spend is, I think people would be very surprised how well the cannabis retailers in San Francisco really do.
Well, Jessica, Nick here. From a feedback standpoint, you know, great job. These little niche licenses in places like LA, Pasadena, Santa Barbara, I really like when a team can secure that. We have a huge social equity focus, not just for, you know, it's an easier way to get into a market early, but it's using investment dollars to do the right thing. Your team is a powerhouse from outside industry, which is 90% more important to me, other than for like cultivators and manufacturers, because industry experience can be learned. The trials and tribulations you've done at other companies, you know, especially some of the ones that you mentioned, I think it's definitely what we would look for, what's interesting, unique. You've got some great value props by limited license in a very high population density place like San Francisco. And the nice thing with these lounges, just why I like the Los Angeles ones, is because through the press, through the networking, through the online kind of brand, as these start to scale, which they will, multi-state, international, the first ones, California has that kind of brand recognition of like Cali and weed, but the responsible adult version of it, of the entertainment side of this, I see a lot of additional verticals. So I'd love some more information on that. I think you're definitely on the right track.
Thank you. I'll be following up with you.
I'll just go ahead and have some closing remarks of my own on this. As far as feedback, I think you did an outstanding job, really outstanding. This is obviously not your first rodeo, and so I appreciate that. What I'd love to see, in a perfect world, if we weren't in COVID, when would you anticipate your launch, your opening? And yeah, let's go with that. And I'd love to talk to you more about working with you.
Yes, thanks, Sherry. Our original plan was to launch in December, but because of COVID and because it's taking some time to get through planning now, our target opening is May or June of next year.
Oh.
I'll go next. Jessica, I thought it was a really nice presentation, and I'll tell you that the things that struck me were, you know, head of crisis management. I mean, I think that background is really interesting, to be flexible in an entrepreneurial situation and And so you know, that struck me. I think that I like the name New Era, New Era. You know, I was feeling that. The 60 to 90% women at pop-ups, I think it's super interesting. There's a great restaurant of cocktail lounge called Fern Bar in my hometown of Sebastopol. And a Fern Bar specifically, it was a strategy for luring women into bars in the 1970s in New York by adding a fern to what would otherwise be all dudes. So I don't know what you guys are doing with to get 60 to 90% women at pop-ups, but that's awesome. And I was interested, especially, I don't know if Tim Chang had any views on this, or if you guys have had any views on this, but, you know, do event spaces need a biometric strategy? Do they need to think about contact tracing? I mean, has this been part of your thinking? So that was another thing that kind of came to me. And then the last thing was this, you know, people are interested in, or they're familiar with safes, they're familiar with convertible notes, you know, traditional instruments. This invest and then get your money paid back, and then you own 23%. That was, I mean, you described it as novel, but I hadn't seen what instrument that was. So maybe other investors are more familiar with that, but that I wasn't familiar with that.
Thanks for the feedback. I'd be happy to chat more with you about it. It's really based on what our partners have done when they've opened up different night entertainment or restaurants because of the risk profile. And just to your quick question, your biometric feedback. Because of COVID, we are considering different ways in order to ensure discrete screening, like especially around, you know, people's temperature and that kind of thing. But more important, you might be interested, I am really interested in figuring out how to track our point of sale, our CRM, and our experiential data in order to develop personalized cannabis product recommendations. And so I think that there's going to be some really big data play opportunities for us after we get up and running. So I'd be happy to chat with you about those.
Cool. Thank you so much.
Yeah, thanks, Jessica. All
Thank
right,
you.
guys. Yeah. Okay, next we've got Gary Krummersmoys. I'm so sorry if I'm butchering your last name there, but with the Blink Group.
No problem at all. Hi, thank you. Great to present. I'm the Gary Krummersmoys. I'm the director. Oh, sorry. Let me share my screen first. Here we go. All right. So I'm the director of corporate development for the Blink Group. We're a designer and distributor of best-in-class cannabis vaping hardware. The company is built on the foundation of innovation.
Wait, Gary, we can't see your screen.
Oh.
I can't see your screen.
Okay. I'm seeing it here. Let's see. Worked when we tested it. Can you see it now?
Nope.
Okay.
Okay, so can it, no one else can see it, right?
Right.
Okay.
All right. Let's see if this will work again. All right. How about now?
Yes. Okay, nice.
Sorry about that. All right. So we'll go this way. All right. Just to crack on again. We're designers and developers of best-in-class cannabis vaping hardware. The foundation of the company is innovation, quality, and safety, and that goes into everything we do. We make the hardware. We don't fill it. We don't touch the plant. So we can bank at a normal bank and send our product across state lines. So we have a quality control team in China that oversees the production, makes sure that everything that comes to our clients is vetted. And
oh, Gary, I think you actually muted yourself now. Just that last sentence. Oh, still muted. Bottom left, the mute.
all right.
Perfect.
Sorry about that. I don't know what's, it worked when we tested it before. So I'll crack on. Hopefully it doesn't happen again. So we're looking at having our serial numbers on every piece of cartridge and battery that's sent out. So if there's ever any issues, our clients can go back to what factory it was, what time it was done, and feel very confident in terms of high quality product. So in terms of the market for cannabis vaping, it's been a growing market. We expect for it to continue. In 2018, we did a bit over $1 million in revenue. In 2019, over $4 million in revenue. And in 2020, we're expecting 10.3 million. And the great news is, even with all the things going on in the first quarter, we had our record quarter for bookings of $2.7 million. And the big reason for this quarter and overall growth is Canada. Since Cannabis 2.0 kicked off and vaping is allowed, it came with built-in barriers to entry. Health Canada and the provinces have quality control and compliance standards much higher than anywhere in the United States, and that is tailor-made for our core competencies. We expect to do over 60% of our revenue from Canada, and we're building a moat. We're one of the handful of companies able to service clients there, and we intend to continue that. In terms of our competitors, there's some public ones and private companies, but we consider us, that Blink has the most rounded and comprehensive offering out there. We also have a very capital light model where we don't have to have big warehouses with inventory. We ship things directly from China, and we have industry leading gross profit margins. And over the last half year, as our competitors have been retrenching, we've been growing. Here's a few of our clients, and we have a very tight relationship with Valence, who's the biggest extraction company in Canada, and we're looking to put out a press release.
Oh, Gary, we can't hear you again.
Sorry, yep.
Good. You caught yourself though.
Something popped up again. With Valence, we're looking to do a press release over the next week or so, announcing how deep our partnership is. For a company that's at our stage and growing, it's still nice to see 4 clients doing over $4 million worth of bookings already. And you can see the management team. It's been battle tested. We went through the vaping crisis, in the middle of the coronavirus. We're executing all the time. And the team is led by the CEO, who's the chairman of the International ISO Standards Committee on Vaping Products, and one of the world's foremost technology experts in the vaping space. So this round is a convertible note. It's $1 million. We have 250,000 in the bank already. It's 11.25 million cap and a 25% discount. Because of all the work done to put in the foundation for the company, all the money is going to be really built for scale, for hiring salespeople, for branding and marketing. And you can see in the financials, we have actual financials, and we're planning to be EBITDA positive in the second half of the year and going forward. The company, even without new money coming in, is already generating enough cash to keep its operations going. So all the cash coming in will be really to turbocharge what we're doing. Thank you very much.
All right, guys. Questions?
I have a question on the space itself. It's a very, as you know, it's a very crowded space. There's a lot of vape hardware out there. Can you talk about some differentiating factors, whether it might be IP or what kind of puts you, makes you stand away from the group, and what do your customers, the Terrasons of the world, Valens, see in your product that's attracting them to it?
Sure. The main thing is our focus on quality and compliance, which pretty much before the vaping crisis, people took it not very seriously. We've been talking about quality and safety from before it was fashionable. So when we came to Canada, we already had a compliance folder, which takes companies months and months, if not quarters, to put together. We had it ready. In terms of quality control team in China, a lot of companies just, buying it from China, getting it shipped, and the clients see what happens once it gets to them.
Gary, mute. You're muted.
Every seems to be every 4 minutes the thing pops up, and now I see it, and I know I have to unmute myself. So it's been this focus on quality and compliance, and we're one of the few companies that can build a product from scratch. Something like this that I showed on the first slide for TerraSend. A lot of companies can white label products, but we can do that, and that's most of our business. But we can also build a product from scratch and good enough to pass the provincial regulators in Canada.
Hey, Gary. Nice to see you again.
Nice to see you, Larry.
I love this vertical. I critically necessary for, licensed operators that want to sell quality and traceable hardware. That being said, can you talk to COVID-19 and what's going on in China, the good, the bad, and the ugly, maybe, of how it's impacted you guys? Because I know there's some things that probably, went in your favor, but why don't you talk?
So it started with the vaping crisis, where supply chains and quality manufacturing became important. With COVID, it showed that we put the time into having redundant factories. So we don't make everything in one factory. They're all ISO and CGMP certified, but we have redundancy in supply lines. We have redundancy in factories. And we were able to ship pretty much 2 weeks after Chinese New Year's, where it took some of our competitors, weeks and weeks, if not months. So in terms of shipping, it didn't affect us too much. In terms of manufacturing, it delayed things. But even now, we're dealing with a situation where, because air freight and everything is so dedicated to medical, that some things get delayed. But it's for everybody across the board. And the good thing for us, cannabis has been deemed essential services. So as long as our clients are buying, they need to be working 3, 4, 5 months in advance. So they're pre-ordering for second half of this year now, and we found that we'd rather not have any of these headaches for sure, and the uncertainty, but it's also helped to burnish some of the quality credentials that we've put together.
Thanks.
I can, Anna, should I go? Yeah.
Yeah, just because we are running a little bit late, I'm going
okay.
to start feedback. No, but go ahead and then combine the questions and feedback.
Okay, sure. Thanks so much, Gary. I also, like Michael, was curious as to how you were able to achieve that 60% market share, or is it 60% market share? Is it in Canada that you have there with the vape market? I was interested in how did you get that? But then the other piece of that is, how do you plan to achieve that in the U.S.? The U.S., as you know, is a much bigger market than Canada. There's a lot of competition, as Larry said, and I'm wondering what your strategy is in the U.S. to get market share here.
Thank you, Sherry, for the question. And I first I'll apologize because it wasn't 60% of the market share. It was 60% of our for 2020.
Okay.
So we, in terms of Canada, we're one of the handful of players that came in there and able to sell. So there's a lot less rigorous compliance here. So in terms of keeping our position there, we're always putting the best foot forward in terms of quality and compliance. And in America, that is becoming more and more important. That is something we're discussing with regulators in Colorado, in Massachusetts, and we've talked to regulators in California about safety and compliance standards for vaping hardware. So our core competency is becoming more and more important. And if this does, when this does become federally legal and it becomes more like nicotine vaping, it's going to become a very regulated market, which we think we'll be able to compete with on the highest level. And the other thing is, we're happy to take bigger and bigger pieces of the market, because we estimated for 2020 the total addressable market for Canada and United States, 480 million, and only 40 million of that is in Canada because it's a new market. But in terms of taking percentage and growing, we don't need our competitors to fail to be able to take a higher and higher percentage of the total addressable market.
Hey there, Gary. Thanks for the presentation amid technological crisis, but way to pull through. From like our ancillary fund and things, this is exactly what we like. I mean, you can't sell, the omelet without the egg here. Maybe that's a bad metaphor, but the packaging, even from our first companies a decade ago, is like, we need packaging, we need these pieces of hardware. The thing that, for my two questions I've got, what I don't like about companies, like, let's say in this, not to say eat too much in one bite, but like with Kushco, what products do your customers need? They need that hardware. What other revenue streams are you guys pursuing when it comes to referral agreements or certain channel partners for the companies that make the instruments that fill that hardware, as well as then if you're selling a company a manufacturing license that's making vape cartridges, or filling paxes or other companies, they're most likely doing flower, a high percentage of those as well. And what other sorts of packaging? If you already have the client relationship, what other revenue streams have you guys thought about to monetize there and expand? And then also, just can you better codify the raise? I did like hearing your EBITDA numbers for when you project that, and on the ancillary side, it's going to keep growing. But just codify your raise and your ask a little bit better for me, please.
Sure. And Nick, you asked about other revenue streams, and in reality, we're such a tight, small team. We're not trying to be the jack of all trades. We just want to be the best in vaping hardware. So we're really focused. We're not really looking at other revenue streams. We're happy to partner with people for packaging and some other things, and we are talking to extraction companies, but we've been very focused with all the opportunities out there. We felt like that's the best thing. In terms of this fundraise, we are 250,000 out of the million came in already. We're talking to other people in terms of deploying capital. It's in terms of details, it's 11.25 cap with a 25% discount to the Series A. We're intending to do a Series A in the second half of the year, if the conditions allow. But the good thing is, because of being battle tested, we can keep going and grow without extra capital. The extra capital is really just to put kerosene on the flame and grow faster.
All right, I think that oh, go ahead. Sorry, Nick. Was that Nick?
Yeah, it's perfect. It's what you've done is something great. Like, you've done something really, really specific and well, just looking above it and below it. And that's where, especially your stage capital, some strategy, and once you've already done that so well, there's another company similar to yours. We were pretty much tripled their revenue based on this nice, good thing that they did. They already have the client. What other additional kind of things can you do for them for like bigger kind of new acquisitions of clients? So I think it's definitely interesting.
Thank you.
I think Luke, have you spoken?
Hey, really nice presentation, Gary. I mean, I know that this is part of the plan. You said you're going to hire a China QA/QC person, and my personal prejudice around this in running a hardware company was, when we started down the path in China, we didn't have someone on the ground, and we ran into some quality problems, and we weren't as responsive as we needed to be to meet our customers' needs. And it got us we were a little hamstrung and spent some time, switching to domestic manufacturing. So I think that, and I've talked to a bunch of people in the nicotine e-vapor space that were kind of, caught flat-footed without a lot of relevant expertise manufacturing in China. So I would just, I would, your revenue growth looks great. I think that investors might be worried that there may be something lurking underneath the hood here, just in terms of quality, and maybe there's not. But just coming out front and just saying, hey, we know about contract manufacturing in China. We've got expertise. That kind of thing, I think, might be reassuring.
Thank you, Luke. And again, I know I had some audio difficulties. I want to say we already have people that we pay on the ground in China.
Okay.
And that was one of the things we invested money in last year, knowing how important that is, and that paid off in spades when coronavirus hit. So, and our CEO, who's the chairman of the International ISO Standards Vaping Committee, he's been doing business and in vaping in China since 2009. So those relationships are deep, and nice having boots on the ground there too.
That's great. Thanks for that, Gary.
Yeah, thanks, Gary. Okay, guys, hang on there. We've got one more great startup. It's David Carvajal with Canvest.
Hi, how are you? Just let me.
Yeah, okay, hold on one second. I'm gonna stop.
Yeah, let me share my screen. Okay. Okay. Let me know if you can see my screen.
We can.
Okay. Hi, everybody. My name is David. I'm the founder and CEO of Canvas, and we develop investment opportunities based on predictive agriculture. So what we believe that we have enough data and we can predict what will be the best growing conditions, we could define what will be the cheapest and best condition to grow cannabis and make it an affordable medicine for everyone, everywhere in the world. And we see Latin America as a massive opportunity to become the largest cannabis exporter region in the world for several reasons. Number one, is the most biodiverse region in the world. If you count Colombia and Brazil, they have 80% of the animals and plants in the planet. It's a low production cost, and we have a very skilled labor on the tech side and in the flower producing side, which is a really good pool of talent. And as of today, we have very good companies in the cannabis space like Cairo and Canopy Growth in Avicana working already in the country. And more countries are opening up to cannabis production, like Uruguay was the first one, and Mexico, Peru, and Ecuador are coming next. In Colombia, we have more than 600 licensed producers, mostly in the non-psychoactive space. So we have two platforms, and the first one is our investment platform, where we select what is the physical asset on the field that you want to invest on. After that, you purchase a share on the assets along with other investors, more or less like buying a hotel share. And you rent those assets back to the cannabis growers, and then you get an interest rate and you share the revenue. This is actually a legal model, and a legal and scalable model, and we spent most of the last year developing it. On the other hand, we have our traceability tool, which is a blockchain-based traceability tool from seed to transformation. We don't go to point of sale as of today, but we trace everything that is going on the field with cultivation nodes and sensors. And we are in parallel developing our own machine learning predictive algorithms to what will be in the next crops. Our business model is actually quite simple. We charge a due diligence fee to the grower before starting the process, and we charge a commission fee between 2 and 4% on the value of the assets. And to the investor, we charge a 1 to 3% collection fee on each payment of the rest of the revenue share and on the interest. We have more than 30 new LPs coming out to the market every month, and this average size of their projects is $250,000 to $300,000. And they are looking, and the investors from the investor side, they are looking to get a rent of between 15 to 80%. In terms of competition, we actually we don't have a direct competitor in our space. We are the only fintech company that integrates traceability technology with an investment tool on the same package. The market in cannabis in Colombia has been great. Last year alone, more than $240 million were invested in the country out of 1.2 billion that were invested in agriculture in general. And this year, apparently things are moving faster, but for the COVID situation, we had some, we have to see what will be the numbers by the end. Our go-to-market strategy starts with content generation and the pilot campaigns. We are launching our platform with 3 pilot projects before the end of June. All in the areas close to the capital. And we go for 10 more projects in the second half. And by the end of the year, we will apply for a full financial license to become the first crowdfunding platform for cannabis outside of the US. We already have made a lot of ground with the regulators, and we are finishing all the documents to present them later next month. And about our team, this is actually our best asset. We have former diplomats with over 15 years of experience in marketing and sales, also in the CBD space in the US. Rafael is our COO. He's been working for over 8 years at the World Bank as an impact investor. Andres is our CTO. He's a blockchain and IoT engineer and architect. He's been working in logistics and finance. And me, I'm a mechanical electronics engineer, experience in product development in several industries like nanotech, oil and gas, and agrotech. And in terms of our traction, we developed our POC last year on the blockchain, and we've been spending almost 1 year in compliance and product development. Right now, we are ready for our pilot launch with all of our software infrastructure developed, and we are looking to integrate the analytics and the predictive models. And one good thing about our product is that it's just cannabis is the beginning. We can integrate the same technology for other high-end crops like coffee, wine, organics, or other kind of medical plants, given that it's a purchase and buy of physical assets that can go through to an agricultural process. And last month, we actually were selected as part of the Founder Institute Select Portfolio. We were one of the 7 companies of Latin America to be included this year among about 4,000 companies in the whole portfolio of the accelerator, which is actually something that makes us very proud. And we are here looking for $150,000 for our seed round. It's mostly developed, it will be mostly dedicated for product development and marketing and sales. And product development, we will spend a lot of time doing the refinement of our AI and our IoT. And thank you very much. This is it for us.
All right, thanks, David. Judges?
I wanted to kind of a question and clarification. I just want to make sure I understand the business model. So if I'm a cultivator, and nice presentation, by the way, thank you very much. It's a $500 fee to get on the platform. If I'm a cultivator, I pay the fee. Am I going through a vetting process with your company before I actually approve to be on the platform and get turned over to investors?
No, you go to due diligence process first. So we do all the background checks, and we see that all the licenses are in order and all the compliance side is clear. And then we just publish, and we get the list of assets they need to publish them on the platform. So there is the due diligence process is just to pay, all the things that we need to make sure that this company is actually fundable.
Okay, and does that include a site visit or face-to-face meetings with the teams, or is it electronic? Yeah.
Okay. We start with the compliance side. Everything is documents can be done offline, but then we have to go and make actually a technical evaluation of the field. So for that, we have our allies who are experts in cultivation, and they go and they perform a technical evaluation, and they tell us what is the risk factor, and we evaluate whether the project is fundable or not.
Okay, great.
Larry, I think you have to leave right now. Maybe I think something just came up for him. Did you want to say something really quickly? And I can connect you guys after. Okay. All right. Well, I think I just gave him his chance. Anyone else?
Yeah, Nick here. David, thanks, parcero. Appreciate the presentation. I was a little confused at certain parts. I've been to Colombia 3 or 4 times to help and work with some of those licensed producers, and I've definitely seen there's an underserviced group that needs investment and not the 10 million, the 50 million US type projects that are definitely struggling. My fear in thinking about this is cannabis crowdsource funding is just like completely not legit in the US. Now international, if forming like the right SPVs, I mean, the right structures, I could see this work, but then there's always this risk liability where actually being on the license to participate with a rev share or like a profit sharing or an equity type ownership, there's sometimes those background checks or disclosures that need to be done in different country by country, and see what just happened in Macedonia with a few executives and foreign owners. Like, so my question would be, if your revenue model is getting, you know, like $500 to get on the platform, barely going to not even cover costs for what that's needed to do, and then you're getting like 1 to 3% on the back end from revenue, 150K is also just enough to get in trouble doing anything when it comes to business. You didn't ask or add on to, so you're looking for 150K, and what are you willing to give the investors?
Okay, so we are going to give between a 12 to 15% of our company equity for this seed round. That's what we're looking for.
Super, thanks for sharing. It definitely seems interesting. I think it could be applicable with some of those other countries. The problem when you look at the amount of licenses in either Uruguay or Paraguay, I mean, Peru having the pharmaceutical license lab before you can actually have the cannabis license on the same place, the farm license, like very limited, very challenging. And there's probably only, 10 or so of those companies in Colombia with moving towards the psychoactive for domestic and then also for export. So how else could you really leverage this, you know, in other very limited markets where it might not be like Colombia with, you know, over 100 different, you know, LP licenses?
So our growth strategy is mostly based on international, going international. So, and that's why our model does not go through a direct financial investment, but rather a commercial investment. It's buying and selling assets in the end. So that's why when you're buying, let's say, a lighting system and you rent it out, you're not actually putting money into it. So that makes the compliance side and the regulation side easier to scale in Colombia and in other countries.
All right, guys, we have to move to feedback. And then any questions you have, just roll it into your feedback.
David, this is Luke. Really enjoyed your presentation. It's creative. I'd like you to send me the deck at luke@l13p.com. And I am, I'm interested in your thoughts as to why ArcView or Mazzucchelli or others might have taken a look at doing something like this or haven't yet, or why they would or wouldn't attempt something like this. Maybe because it's too ambitious, maybe whatever it is.
David, I didn't know if you wanted to respond to that or.
Oh, actually, and just to talking about Mazzucchelli, we've actually been talking with them about making a partnership. In fact, so they are most focused on the financial side. So our approach is more from the cultivation side, gathering the data from the crop and generate financial products on top of that. So working with them to make a partnership and share some technology. So
cool, thanks.
Other judges?
I'll jump in. I was going to say, I think it's a very interesting model. I think it's serving a huge need in terms of getting dollars to companies in Latin America, and also the ability for North American investors to invest in those companies and have access to them. I think is fascinating. my question, some of my questions, obviously not to be answered, but you know, I'd want to know as an investor, what do my investor communications look like if I invest in a company? If I invested in a specific company, do I have direct access to that company, or am I working through your platform? My personal feeling is if I made an investment through this, you know, you want to track the company well and have the opportunity to possibly make future investments or build a relationship with that company. But I think this is really serving a huge need in LATAM. So good presentation. Thank you.
Thank you.
It's Sherry. Hi, I'm going to have to split right now, but I want to thank you so much. Very, very interesting, especially to hear from someone from another country. Although, you know, we have heard from Colombia quite a bit in the last year, I would say. For me personally, I needed a little bit more focus. I found myself getting confused about the exact business model, but maybe we could do that at a later point. But thank you all so much.
Okay. Thank you.
All right.
Thank you, everybody.
Yeah, guys. Let's see. Actually, we do have about a minute. Anyone in the audience, if you have a question, you can lift your hand, and I can let you speak. Or if you want to type out your question in chat. Not seeing any questions. Yeah, I think everyone's just in watch mode today. Sometimes we get really active, like attendees, and sometimes they're just, you know, speculators. So I think today's the speculator day. All right, so I think that actually concludes our event then. Thank you so much to all the judges and then to all the startups that pitched today. You know, if you want information, or okay, wait a second, one new message. Oh, okay, yeah, right. Okay, so that was the message from Chris, so actually, okay. Yeah, so, you know, if you need to be connected, feel free to reach out to me. I think you know Dan, and I've been CC'd on every email. So, yeah, and thanks so much. Stay safe out there and enjoy the rest of your day and week. Bye, guys.